Today, I'm joined by market research analyst, especially in commodities, Lior Gantz, and we're going to talk about how this macro environment is an incredible opportunity to grow your financial freedom. There's a lot of uncertainty, there's a lot of fear, there's a lot of very strange things happening in the world. But one of the ironic things is while that's occurring, it presents an incredible opportunity in commodities. And we're going to be talking about how this all aids to commodities and how you can profit from everything that's happening, right? Because as we're seeing devaluation of currency, as we're seeing social instability, there's a lot of things that we can't control that we can get hung up onto. And one of the only things that we can control is our own strategies and our own financial freedom. And it's one of those things that, for better or worse, we have to focus on. And this is one of those rare moments in time. And we're going to be breaking that all down today. So, Lior, would you agree with that statement?
Yeah, we are definitely in a unique capsule, a window where confluence of things happened, and there's a unique chance with certain commodities to see the type of returns that happen usually in a decade happening in a year span. But it's really important to also say that this is a trade. This is not a Warren Buffett type company where you buy. This is a commoditized business. In other words, once these profits become amazing, more entrants will come in. It's very easy to start new mines up, etc., around the world. But we do have a very unique window here where this is going to be an incredible. It already is an incredible time. It's going to continue being an incredible time.
What do you think are the main factors of that specifically? Because we've seen so many different things compound, especially since about March 2020. So there's been a lot of things. It's been a confluence of them. What do you think are some of the primary drivers?
I think the number one overarching catalyst for this whole commodities super cycle is the ESG overhang of regulations around the world. No matter where you are, it is becoming harder, less popular, and more difficult to build new mines. And it's not only in oil, which gets deemed like as a very harmful commodity for the planet. It's everything. When you touch the environment, you are taking on millions, tens of millions, hundreds of millions in reclamation later on when the mine is depleted and you have to restore the environment. This puts so much pressure on these companies to go after only the cream of the crop in terms of deposits and not try to just build any old mine. So it creates such a shortage in the projects that you would tackle on initially. Add to that the political environment where somebody from the government can just come in and start slapping you with fines, and you're talking about millions of dollars worth of fines. And this is everywhere in the world. And you're now entering a very complicated business where it used to be very easy. You get the permits, you go into production, you get the material out, you sell it for a profit. Very straightforward business. Now you have to work through a lot of loopholes. I don't see that changing. And we saw the same thing in the 70s. So this is very similar to that dynamic. It was very hard back then for people who either lived through that or have studied that time. They put all sorts of restrictions on you when you try to go after certain commodities. So I think that's one thing. Secondly, I think it's deglobalization. The healthcare crisis was the best case study to see how governments cooperate with each other. You had literally a global issue. So it's like the perfect thing for G20 and G7 to lead the world out of it. And instead you saw there's like 196 to 206 countries, no matter, depending on who's counting? And you've seen a gazillion different approaches to handling this healthcare crisis. You've seen point blaming. You've seen everything that has to do with deglobalization, where this continent is doing it the wrong way. These guys are doing it the wrong way. It came from there. There's no cooperation. And deglobalization is in commodities because countries are trying to secure their future in terms of sourcing commodities. And when you try to build a mine in your own country, instead of where it's cheapest, you obviously are going to raise the price of doing that. Just to give you an idea, in China, for example, when you want to build a magnetic levitation railway system that goes for hundreds of kilometers, people are just told, hey, your house will not be here tomorrow. Just move it. And because we're building a rail. No compensation, no nothing. There's no, it's amazing the types of projects they can build, the government, because the property rights are nil. Compare that to California, where every mile of railway takes about 5 years to build. You need to get concessions from 25 different lawyers. So my point of this example is when you try to build mines in third world countries, second world countries, and first world countries, it's not the same thing. It's not the same costs. And that's why there's going to be a madhouse for securing these commodities, especially for big tech companies. In America right now, Jake, there's one lithium mine in the entire United States of America. So, we all know uranium is a big issue in America. Rare earths. I mean, this is a huge problem. It's not going away. You couple that with ESG, which makes building a new mine a decade-long ordeal. And these are not things that are trendy. These are things that are fundamental. Those two things are fundamental. And now the third thing, I think this is the one where the markets are not getting this. I think markets are not getting how big the millennials, in terms of their generational wealth building and the demand that they will bring to the markets in terms of what they still need to purchase. I think the markets are clearly underappreciating how much more the millennials are going to consume. You have incredible shortages in construction and housing. A whole new neighborhoods in every major city in America are going to be built in the next few years. You need construction. You need infrastructure, new cars, new plug system. It's almost like we're building another America because these people have not only have they delayed marriage in general because of the healthcare crisis, they've delayed it, almost stopped it. There were no marriages in America in general for the last 2 years. No family formation. This is a huge, huge strain on commodities for the next 5 years as well. So those three things, in my opinion, are the big things. Then you couple that with the monetary, unprecedented monetary stimulus that we've seen, and all the money that's in the system right now because of the government response and the central bank response. And it's just something we've never seen those four come together so perfectly.
Yeah, as a father, I do not like it. And that's why I said at the beginning when I did the little intro, it's a unfortunately fortunate situation in that there's still a lot of opportunity. I made a video not too long ago on lithium just for the sake of bringing it back, just for the sake of this conversation. And I was doing the math on all the known lithium reserves in the world versus the government mandates for electric vehicles. And if hypothetically they actually were to make just America, just China, just Canada, just some of the major countries, and then you factor in everything else lithium's also used for, charging stations, you're talking about more lithium than every known reserve, basically. And you're looking at this across the board in almost every commodity, and it's kind of scary. And I've always poked fun at it the last year or so. Has anyone ever done the math on it? And I'd always kind of ask that question. And then now you're staring it down the barrel, and it's quite bizarre. Obviously, it presents a tremendous opportunity financially, but this was before the Russia stuff happened. Now you've got everything from fertilizer to gases to uranium. All these things are gone, and the American politicians have sold out all of America. They've sold everything out, from factories to mining. Then they have all these regulations, so none of the commodities. Everything's been sold out, and it's it can be. That's a whole conversation in of itself. But on the financial component, that is pretty marvelous as someone investing in commodities, right?
Yeah, and indirectly, you raised the one point where I think I've only spoken about this. I've never spoken about this publicly, but I've spoken about this with a few of my closest confidants. Just think about any other industry in the world that has seen such a age gap as mining has. In America, if you ask any college student, hey, do you want to go into mining for the past 20 years? Has anyone ever told you yes? There's such an expertise gap. I mean, people are not going there. They're going to tech, to Wall Street. America, as you said, has been glued to the just-in-time world where they say, look, we are such a wealthy economy. Everyone, in a general sense, has a phone, has a car, has a house. We don't need to manufacture things here. We'll push manufacturing out. We'll be a service economy where we serve each other. We build innovation, but we don't need to necessarily manufacture the jeans here or the appliances. All that stuff that's easy to replicate will move outside. That was all great in a globalized world, but now when we are transitioning into another sort of economy, because no CEO will ever go to his board and say, look, all of our manufacturing is in China. They have this zero COVID policy. And for the next 3 months, we're going to have shortage. He's going to get his job sacked. He's going to be out of the door. They're going to ask him, how didn't you foresee these sorts of problems? We cannot rely on other countries anymore. We need manufacturing hubs in America. We need automation, robotics. We need to build, all these things back here, all the high-tech stuff. So for sure, there's an expertise gap, a skills gap. And because everything was moved out to make America this service economy, you have a structural problem. And other countries understand that. They know that. Obviously, America, because of its wealth, because of its purchasing power, it is the engine that drives the whole global economy. So it's economic war or anything that is being talked about where China is going to take the lead here. It's not realistic near term. America is still the top dog and it has all of the components to keep leading. But we cannot argue with the fact that China's economy, as GDP wise, in 3 to 4 years, it's going to be bigger than America's, and its army is going to be bigger than American army by 2034. So you're talking about a once in a 100-year move, where the move is going from America to China. And if you're talking about an even bigger move, a move from west to east, we haven't seen this in centuries. So you're living in very unique times. And like you said, as a father, you're like, man, my kid is growing up in one of the biggest shakeups in the last few 100 years. But as an investor, where you can't control this, it's not like you're going to tilt the balance here. You can only plug into the system and try to be a beneficiary of it and not a victim of it. So that's always been my stance. Whatever I can plug into, I should, and I should not just be like a Robinson Crusoe and just complain about the way things are and try to fix them, because it just doesn't work.
Yeah, my philosophy is that the people running global governments and global central banks are sociopaths and psychopaths that will continue to wipe out pretty much everybody on their pursuit to print and buy the world. And the only thing I can do is, a handful of things, but when we're talking financially, is do the best job I can to ensure my own financial freedom. Now, all of this stuff presents an incredible opportunity in commodities. When you get down to the nitty gritty strategy, when you say this is more of a trade, what are you thinking commodity wise is going to benefit the most? All things considered, including now bringing into the forefront this Russia stuff and all these talks of sanctions. Where do you think the best opportunities lie to exponentially increase our financial freedom?
Yeah, I think there are three types of commodity traders. There are the super short-term traders. They see sanctions. They see something that has immediate impact, and they try to capitalize. This is something that I personally do not delve into, because I don't think I have the competitive advantage compared with algorithms, big banks, and just smart, fast money. It's very hard. You may win, but you're going to get the leftovers. So I don't do the really short-term strategic stuff. Like, you get a news bulletin that this country just banned that commodity and you try to trade that. Okay. So, and then there's the medium term. The medium term is something where you take a 6 to 12 month view on a commodity. I do that a lot. So, for example, Fed rate hikes obviously impact gold. We know the Fed rate hike schedule for 2022. There's no reason why my portfolio should not have exposure to precious metals, because it's very easy to see the next 6 to 12 months. Historically, we know that in Fed rate hikes, there's been 6 Fed rate hikes in the past 51 years. So under the fiat monetary system, we had 2 in the 70s, 1 in the 90s, 2 in the 2000s, and the 2015 to 2018 one. And now we're starting the 7th. We just started it.
Wait. Is that true? Say that again. There's only been 6 rate hikes ever?
6 rate hike periods. In other words,
periods.
Yes,
okay.
Where you start to raise rates. And rate hike periods, they can go for 2-3 years, and they can have 10, 15, 20 rate hikes. But in terms of cycles, right?
Okay. Understood.
Yeah. 100% of the times, in other words, 6 out of 6, gold prices have appreciated. The average appreciation has been 30%. If we take this rate hike, which started on March 15th, where gold was, to my memory, like 1930, in other words, 1930 an ounce, 30% is around $570. So by the time this rate hike cycle finishes, gold could be at 2,500 or higher. So we are in a very good period for gold. Compared to the last rate hike period in 2015, if you remember, December 2015, they raised rates by 25 basis points. Gold bottomed on that day for $1,053 an ounce. But the next rate hike was a year later in December 2016. They took a 1-year break. This time, they're not going to do that. They will either raise rates and surprise the markets on May 4th, which I don't believe do. But I do think that on June 15th, they will raise rates by 50 basis points. The last Fed chair to do that was Greenspan in 2000. So this is something that has not happened in 22 years. And I think, the subterfuge or between the lines, what Powell was telling in his Q&A session yesterday, he was saying, look, inflation is way too high. In other words, prepare for a rate hike of 50 basis points very soon. So, we know that they're going to raise rates by about 1.5% to 1.75%. That's very aggressive. You're already seeing the 10-year Treasury yields at 2.37%. That's massive. We haven't seen those in years, not even in 2018 when they tightened. So even before they start to tighten, everything is getting priced into a very aggressive tightening period. Financial conditions are very tight right now. And we haven't even seen this impact the real estate market. So in my opinion, gold has a great year ahead of it because stocks are going to be in a very uncertain period. And the best time for gold in the past decade was when they raised rates and stocks did not follow that boom. Like 2016, where the year started with a correction for the S&P 500 and gold soared, and 2011, where gold hit the then all-time high, and stocks just did not move the same way. So I love 2022 for gold, and indirectly for silver. I think that other commodities that are going to do amazing in the next 6 to 12 months are uranium. Uranium stocks have done amazing, but the uranium price has not really moved that much. Most projects around the world need uranium to be at 45 or higher for them to even think about getting into production. It's not there. It's quite amazing to see that. So uranium has a lot going for it. In terms of lithium, if we don't have a recession in the next 12 months and EV sales continue to be strong, lithium is going to be amazing as well. So you have these 4 core commodities: gold, silver, uranium, and lithium, that I think have a really clear path in 2022. So those are going to be strong for me. And we can talk about like other commodities, but in terms of long term or next 2, 3, 4, 5 years, you have these acute shortages in copper that are clear, and copper is the mother of all base metals. It doesn't get any. There's no replacement. There's nothing you can do to change the dynamic of copper. Copper is needed in everything, and 50% of copper is consumed by China. That's not going to stop. And so when you have one of the, after oil, the biggest commodity in terms of its importance for the global economy, and half of it is consumed by China. And now you know that there's a big deficit in copper. That is where you're going to see some fireworks. So for me, for the next 5 years, that is the one to look at. It's boring and nobody talks about it, which makes it even better.
Okay, so all things considered, this commodities market is going higher. But then you've also got this incredible amount of money printing, buying a mortgage-backed security, sending money all over the world by governments. And I know Powell says inflation's bad. It is my opinion that this will do absolutely nothing. And this is really giving the appearance that they're going to do something as they continue to inflate. If they wanted to control inflation, we know it's higher than what they're saying. I mean, their numbers bullshit, and it's closer to 20%. Just look at what Congress gave themselves their pay raises at, 20%. What do you think happens here? Do you think they raise them just so they can move them back the tide and eventually go back towards the negative? Do you think they're just giving the appearance for a while and then hoping supply chains and everything calm down over the next 24 months? Where do you think that this goes, and specifically as it pertains to the devaluation of absolute value of fiat currency?
Yeah, that's got to be the best question I've been asked. I think the Fed, what it's done well under Powell is it tells the market well in advance what it thinks, and it allows the market to digest information for months. So I think the financial conditions, we have 2 economies. We have Wall Street economy and we have the real economy. The Wall Street economy, it's forward looking, it prices things, weeks, months, years in advance sometimes. And it has already, to a large degree, it's already encapsulated a lot of what Powell has been saying. So once they start to implement, you're not going to see shock and awe on Wall Street, because Wall Street has been told everything. If you wanted to sell because you know that there's 7 rate hikes coming, you could already do that. The real economy real estate, lending, borrowing, anything that has to do with Main Street America, with the real jobs, the middle class, has not been factored in. They have not started to see mortgage rates go up substantially. So I think the next stage is once they start raising rates, you're going to see this starting to hit the real economy and not Wall Street. Wall Street, for the most part, in my opinion, has priced in a lot of what's happening. And you may start to see the markets even trending up and not down. In other words, they're going to raise rates. Everybody is going to expect the markets to fall dramatically from the sky because it's tightening. But the tightening has already happened on Wall Street. Everybody knows what's going to happen. You need to shock them with something new that, we don't know if it's going to happen. So I think Wall Street is not bearish, not bullish. It's on a wait and see. And it will be on a wait and see for a few more months. It wants to see inflation, moderate or normalize or do something where it's not like every month, 40-year high, 40-year high, 40-year high. And just remember, CPI, you're doing year over year. So if you want August to be 7%, it means that it's 7% on top of the 7% we already seen. That's very that is cataclysmic. So I don't foresee that. In my opinion, in the next 2-3 months, we will see inflation starting to become less of a big talking issue. The problem that the Fed faces is that the Fed influences what I told you, the rate-sensitive parts of the economy, like mortgages and lending. But it does not influence and has no control over the joke that government has made out of supply chains. This lack of innovation and ingenuity and creativity by the Biden administration when it comes to supply chains and regulations and incentives and ways of combating what we've seen in the last year and a half, it's laughable. You have a country with 2,000 ports, and out of them, 2 ports, Long Beach and Los Angeles, take care of 40% of the imports. It's unimaginable. Why can't you create a regulatory environment, an incentive system, or anything else to divert ships to other parts of the country? Why do you allow 10% or 20% of the workforce in Los Angeles and in Long Beach to be on health restriction measures at home during Christmas time? There's so many things that they got wrong. And that's why you see ships delayed for a week at the ocean. It's unimaginable. Any other first world country would not get to that type of situation because when you look at Google rankings for automation in ports, the Los Angeles port is number 327 in the world. There's a port in Tanzania that has more automation. It's crazy. And so I think that cannot be solved. You have a 400,000 worker shortage in lift workers. You call them forklift workers. You have about 85,000 jobs missing in trucking. These are things that should have been incentivized by the government to pursue, a tax incentive, training incentives for companies to start hiring and for people to start getting trained in these professions. And it hasn't been done. Everything was relied on this thesis. People will go and get vaccinated. Because they get vaccinated, they will feel safe. Because they feel safe, they will go back to work. It's such a simplistic Washington stereotype. They haven't factored in that there's millions of people that went back to study. They went back to school. They're not going to the workforce. They haven't factored into this real estate and stock market bubbles caused people to just say, okay, well, I can retire. Like my spouse can keep working, but I can retire. So a lot of couples, one is retired and not coming back to the workforce. And so many people are doing something very unique that they haven't done ever. They are sitting at home and thinking, what do I want to do? They're not just rushing to get a job to make ends meet. They live with their parents or they shack up or do whatever. They're like an anaconda. on the banks, waiting for the big kill. They don't want to go for small kills. And it's, it's weird, right? You think people would just go back to work, right? Because they need money. People are sitting there for another month, and people are not going back to work. And it's amazing to see that. And then obviously you have people that don't trust that the government will not close schools again. So it's a problem for them. They don't know whether to stay at home with the kid or not. And these are changing dynamics in America with the job participation. What the Fed wants to do in its mind is it wants to raise rates so that inflation becomes something that the population can trust is under control. In other words, there's a perception that it's under control. Whether or not it's already under control, it doesn't matter. What the Fed thinks will happen is once Main Street America believes that it's under control, then they will say, okay, I feel confident that I can go back to work, and we'll have a real expansion. The Fed is afraid that if they don't get that under control and people start really acting like there's inflation, in other words, they go out there and shop for things now rather than later because they think inflation is going to just keep going, then you're in a real crisis. We haven't seen that fear yet, but if Powell just hints that this is happening, you will see a 10 to 15% drop in the S&P 500 like this. So the fear, the potential of this is still there. That's why Wall Street is on a wait and see. And I think that's really good for gold, because if Wall Street is on a wait and see, that you need to hedge your portfolio, and a lot of fund managers hedge with gold. I don't know if your audience knows this, but if they Google the biggest one-day inflow to GLD ETF ever, and this is ever since inception, since 2004, it was on Friday, the 24th of January, 2022. So smart money is definitely getting into gold. You don't see the retail crowd because they are just very skeptical after they've seen 2021, nothing happening and all this inflation. So they're like, I don't trust it. But smart money is definitely getting in there. And I think that's the main issue here, that people just do not understand. The Fed can influence inflation, but it's not just the demand that's the problem. It's not, the Fed is going to influence demand. They're going to make people think twice before jumping on a new mortgage or do it. But the supply side is still very bad. Supply chains are still awful. You need that to be fixed, and that is the government. And the Fed is Powell's really diplomatically trying to tell politicians on both sides of the aisle, like this is you. You need to get this straight. I can do this. You need to do that. And I think once we really see the government do that, we'll be closer to the midterms where they want to show results to the voters. And that's why, the American, enterprise system, the competitive system that we have in America that is second to none, that's when it's going to really kick into gear, and all this politics stuff will go away, and they'll start really doing things to get the votes. So the second half of the year, that's when I think we'll get more confidence back. But for now, what you're seeing right now, this chaotic market and booms in commodities here and there, that's more of what I see continuing for the next few months.
Leo Gantz, where can people find you?
Wealthresearchgroup.com is the website. On the homepage, you can find a way to subscribe to the newsletter. And what we try and do 3 times a week is congest everything I just said into articles, and then also shoot out blitz and alerts on companies that I personally either are invested in or look at. If you go to our website and you look at the top menu, you'll see a tab there that's called Portfolio, and that's where you can access my portfolio and see it live. And another one that I think people will like is the Special Reports tab. It's like an array of PDF downloads on all sorts of topics where you can just sit down over the weekend and get a lot of education done. But for sure, the newsletter is the one that keeps you up to date. It's almost like getting one of these interviews 3 times a week, every time on the fresh topics of what's going on, Jake.
So let us know in the comments right there down below, what's your number one pick for commodities over the next few years? Let us know in the comments right there down below. Then we can go back 24 months from now and we can see who was the biggest winner. So thanks for watching today's episode. Make sure you hit the like button, subscribe, bell notification. And we want to thank you for coming on today, Lior, and helping us make sense. And maybe more than that, not just make sense, but find the opportunities in what's happening.